It starts quietly. No scandals, no crashes, no headlines. Just a steady, invisible accumulation of power. Every time an American buys a home, saves for retirement, or invests in an index fund, one company quietly grows stronger. BlackRock. As of 2025, it manages over $10 trillion in assets, more than the GDP of every nation on Earth except the United States and China. Its reach touches 401(k)s, pension funds, real estate, tech stocks, and government bonds. If money moves, BlackRock has a footprint in it. Most people have never spoken to a BlackRock employee, yet they own part of your mortgage, your job's retirement plan, and maybe even your town's infrastructure bonds. The company doesn't sell you products. It sells the system that runs them. And at the center of that system sits Larry Fink, BlackRock's co-founder and CEO, a man with no elected office, yet whose letters to CEOs can shift corporate policy faster than most legislation. In 2008, while Wall Street burned, the U.S. government called one private company to help stabilize the system. Not the Federal Reserve, not the Treasury. BlackRock. They built the models. They priced the toxic assets. They advised the very regulators meant to oversee them. From that moment on, the line between public power and private finance blurred, and BlackRock learned something no one else dared to say out loud. Control the flows of capital, and you control the future. But how did one company, founded in 1988 with borrowed office space and 8 employees, rise to quietly manage nearly every dollar that passes through modern finance? And if BlackRock already owns everything, who really owns BlackRock? When people hear BlackRock, they think of a money manager, mutual funds, ETFs, Wall Street jargon. But the company isn't just managing portfolios. It's running the operating system of modern finance. BlackRock oversees assets for governments, corporations, universities, and individuals in over 100 countries. It owns stakes in companies that, combined, employ over 40 million people worldwide. If you look at the top shareholders of Apple, Microsoft, Amazon, JP Morgan Chase, or ExxonMobil, you'll see the same name near the top, BlackRock. It's not a controlling shareholder in the old sense. It doesn't need to be. Its power comes from breadth, not ownership percentage. A few percent here, a few percent there, across nearly every major company on the S&P 500. That's not just influence. That's integration. BlackRock's web is built through a product called iShares, a family of exchange-traded funds, ETFs, that dominate markets. There's an ETF for everything: clean energy, defense, AI, even government bonds. Each one gives investors diversification, a slice of everything, and every slice adds to BlackRock's mass. By 2025, iShares ETFs hold over $3.5 trillion, more than all but a handful of central banks manage in total reserves. Every month, pension contributions, 401(k) deductions, and institutional flows automatically by these funds. And those steady inflows make BlackRock the default owner of the corporate world. When you buy the market, you buy through BlackRock. But BlackRock's true power isn't just in what it owns, it's in what it knows. At the heart of its empire sits Aladdin, short for Asset, Liability, Debt, and Derivative Investment Network. It's a risk management platform that tracks over $25 trillion in assets across clients including banks, insurers, and even rival firms. JP Morgan uses it. So does Citi. So do central banks. Aladdin doesn't just analyze portfolios, it sees them all simultaneously. It can model how a rate hike ripples through mortgages, equities, and credit markets before most traders even finish their coffee. When Aladdin shifts its risk parameters, the market follows, often without realizing it. Then there's the political web. During the 2008 crash, the Federal Reserve turned to BlackRock to help manage toxic assets. During the 2020 pandemic, it was again BlackRock that ran the Fed's bond buying program, purchasing corporate debt on behalf of the government. In both crises, the company was positioned inside the control room, advising the very regulators who were supposed to oversee Wall Street. Critics called it a shadow government of finance. Supporters called it the only adult in the room. Either way, the result was the same. When institutions broke, BlackRock was the one fixing them and billing for it. Through ESG investing, BlackRock began influencing how corporations behave, not just financially, but socially. By deciding which companies qualify for sustainable investment, it could tilt trillions of dollars toward compliant firms and away from those that don't fit the criteria. To some, it looked like progress. To others, it looked like a private company setting global policy. Because when the largest asset manager in history says, "We expect you to go net zero," every CEO listens, even if no law requires it. On paper, markets look competitive. In reality, BlackRock, Vanguard, and State Street own significant stakes in nearly every major corporation. They compete in branding, but cooperate through passive ownership. Three firms quietly influence the direction of thousands. A 2020 academic study called it common ownership, a structure that reduces competition and concentrates control. It's capitalism's paradox. The more diversified investors become, the more centralized the system grows. If markets are supposed to reflect millions of independent decisions, what happens when one algorithm, one firm, or one philosophy quietly connects them all? And what happens if that firm, by accident or design, ever decides to shift the flow? It's easy to see BlackRock as the puppeteer, but the truth is more complicated and more dangerous. Because the deeper the company embedded itself into the financial system, the less able it became to step out of it. Every day, billions of dollars automatically flow into index funds, retirement accounts, and passive ETFs. Those flows don't depend on traders' decisions or economic forecasts. They're coded in, the default option for every paycheck, pension, and portfolio. That automation turned markets from dynamic arenas into self-reinforcing loops. Money flows into index funds by the biggest companies. Those companies' prices rise, the funds perform well, more money flows in. It's not manipulation. It's momentum on autopilot. And BlackRock sits in the middle, collecting fractions of a percent from every dollar that passes through, whether the market rises or falls. By 2025, over 60% of all U.S. equity assets are managed passively. That means trillions of dollars are being invested without anyone truly deciding where it should go. That's the paradox. BlackRock's dominance comes from being passive, but its passivity shapes everything. When trillions of automated trades move in sync, the result isn't a market. It's a feedback loop that rewards scale and punishes deviation. Small companies struggle to attract investment simply because they're not already large enough to be inside the indexes. It's capitalism turning into gravity. BlackRock's ETFs promise investors instant liquidity, the ability to buy or sell at any time. But behind those products lie underlying assets that aren't nearly as liquid: corporate bonds, real estate, emerging markets. If panic ever spreads and investors rush to exit, BlackRock could face the same paradox that brought down banks in the past. Everyone wants their money back at once, but the assets can't move that fast. It's not fraud. It's physics. Then there's Aladdin, the nerve center of global risk management. It doesn't just serve BlackRock. It serves nearly every major financial institution. That creates efficiency, but also a single point of failure. If the system ever malfunctioned, or if data were compromised, trillions of dollars in assets could misprice simultaneously. The company insists Aladdin is secure. But the real risk isn't hacking, it's homogeneity. When everyone uses the same model to measure risk, they all react the same way when stress hits. That's what turned 2008's subprime problem into a global contagion. Even BlackRock's environmental and social mandates, ESG, have become traps of their own. Politicians accuse the firm of overreach, while activists claim it's not doing enough. In 2024, multiple U.S. states pulled pension funds in protest of ESG policies, while others demanded stronger climate action. BlackRock can't please both sides, and yet both sides rely on it. Pull too far left or right, and the entire network of clients, funds, and governments could splinter. It's the curse of scale. The bigger you get, the fewer moves you can make. The irony? This wasn't planned. BlackRock didn't set out to rule the financial world. It evolved into the backbone of a system that demanded efficiency above all else. Every regulation, every technological advance, every investor behavior reinforced its centrality. By solving the chaos of the markets, it created predictability, and predictability breeds dependence. The company can't stop growing because the system won't let it. It's too interwoven, too embedded, too necessary. Now, governments rely on BlackRock's models. Corporations rely on its funds. Investors rely on its stability. And BlackRock relies on all of them to keep believing that passive is safe, that the machine can't break because it never sleeps. But every machine, no matter how perfect, depends on power. And in this case, power means trust. If that trust ever cracks, if enough people start asking who's really steering the global portfolio, the system could start to unravel from its own weight. BlackRock's empire isn't a conspiracy. It's a mirror, reflecting how modern capitalism traded control for convenience, and now can't remember how to function without it. But history shows, every empire built on convenience eventually faces the same reckoning. The moment the machine stops serving the people, and the people start questioning the machine. In a quiet suburb outside Dallas, Rachel Green scrolls through home listings on her phone. Every house she likes sells within days, often for cash. Not by families. Not by locals. By investment funds. Some of those funds are owned by real estate investment vehicles managed by BlackRock. In 2021, the company made headlines for purchasing single-family homes across the U.S., outbidding ordinary buyers. They said it was just a tiny fraction of the market, and technically, it was. But the ripple effect was huge. Every cash purchase set a new price benchmark. Homeownership drifted further from reach. Rachel doesn't know she's competing with the same company that manages her retirement account. Her 401k owns the fund buying her neighborhood. She's paying the price twice, once as a renter, once as an investor. In Pennsylvania, Marcus Lopez, a 52-year-old steel plant manager, checks his pension fund's quarterly report. It's performing well, stable, diversified, heavily indexed. But when the company announces layoffs, he realizes something strange. The same index fund that supports his pension also holds shares in his employer's competitors. No matter which company wins or loses, the fund still profits. Marcus doesn't. That's the hidden side of owning everything. When capital is that diversified, outcomes don't matter. Only flows do. Jobs, communities, and identities become interchangeable parts of a portfolio. A few hundred miles away, in New York City, Mayor Alicia Park reviews a new infrastructure project, a public-private partnership to rebuild flood defenses. The financing comes through municipal bonds, purchased by BlackRock's fixed-income funds. That means the same company that manages Wall Street's wealth also collects interest from taxpayer-backed debt. Governments depend on investors. Investors depend on governments. The lines blur until it's hard to tell who's serving whom. It's not the first time finance and government merged this way. In the 18th century, the British East India Company became so large, so globally entangled, that it effectively ran parts of the empire itself. It collected taxes, commanded private armies, and even set trade policy, all while claiming to be just a business. Eventually, public backlash forced Parliament to step in. The company had become too powerful, too unaccountable, and too essential to fail. The government didn't destroy it, it absorbed it. Sound familiar? Every time a crisis strikes today, from subprime to COVID, the modern state doesn't nationalize industries. It delegates power to firms like BlackRock to fix them. And in doing so, it strengthens their role further. Rachel's rent checks, Marcus's pension fund, and Mayor Park's bond payments all flow upward into the same circuits. ETFs, risk models, asset pools. Those pools reinvest in the same markets they came from. Money circulates, but power concentrates. The result isn't overt domination, it's quiet dependency. Everyone's doing well, as long as the flows continue. But no one can afford for them to stop. Even BlackRock's critics use its products. Even governments that denounce its influence rely on its liquidity. And even activists calling for decentralization often hold their savings in BlackRock ETFs. The empire isn't hidden behind walls. It's built into the everyday. That's what makes it unshakable, and what makes it so fragile. History teaches that every system built for efficiency eventually meets a human limit, the moment people begin to feel the cost of convenience. The question now isn't whether BlackRock will face that reckoning. It's what happens to the global economy when it does. BlackRock isn't a villain. It's a mirror, reflecting what markets became when efficiency replaced intention. Every pension contribution, every index fund purchase, every government bailout helped build the empire. Not through conspiracy, but through collective delegation, Millions of people outsourcing responsibility to the same machine because it seems safer that way. We wanted stability. We got centralization. We wanted risk management. We got dependency. Now, the line between market and infrastructure has vanished. BlackRock is the invisible scaffolding of the global economy, and that's what makes it untouchable. If the company tried to shrink, markets would tremble. If it pulled back from government contracts, crisis response would slow. If it sold off ETFs, millions of retirement portfolios would instantly lose value. It has become the financial circulatory system, and you can't remove a circulatory system without risking the patient. That's the trap. BlackRock can't stop growing, and the world can't let it fail. Every empire eventually meets its paradox. The moment its survival becomes everyone's problem. History repeats with different tools. The Medici family controlled Europe through banking. The East India Company controlled trade through monopoly. Today, firms like BlackRock control capital allocation, the bloodstream of nations. But here's the key difference. BlackRock doesn't rule through armies or governments. It rules through trust. The assumption that markets are neutral, algorithms are objective, and diversification equals safety. Break that trust, and the empire falters overnight. Not through revolution, but through redemption requests. Back in Dallas, Rachel finally buys a smaller house, still financed through a mortgage packaged into a fund owned by BlackRock. Marcus in Pennsylvania gets rehired by another steel firm, also publicly traded, also owned through index funds. Mayor Park's infrastructure project finishes on time, financed by the same investors funding every other city. None of them see the full picture, but they all live inside it. The empire doesn't hover above their lives. It is their lives. Maybe the next transformation won't come from regulation or rebellion, but from recognition, realizing that passive ownership still has moral consequences. That every automated investment is still a vote for how the world is run. Because the real question isn't whether BlackRock owns everything. It's whether we've become too comfortable letting algorithms decide who owns us. So the next time you open your retirement statement or buy an ETF, pause for a second. Ask, where does my money sleep at night? Who is it working for while I'm not looking? Because empires don't start with dictators. They start with delegation. And the moment we stop asking where our capital goes, that's when someone else quietly decides for us. BlackRock's empire isn't hidden behind walls. It's woven into the world we built, efficient, rational, and quietly absolute. The only thing more powerful than the system itself is the moment people finally choose to understand it.